Hey everyone, Arjun Dhingra. I'm a mortgage advisor and also with the Mortgage Reports. I want to talk to you about a key and hot topic, which is inflation. You've probably seen this come across the airwaves or when you're checking out your news. So I want to discuss with you exactly what it is, how it impacts you and real estate, and what you can do to position yourself to hedge against it. So what exactly is inflation? Well, simply put, by definition, it's an uptick in prices and a decrease in purchasing power. So here in the United States, that means a weaker dollar. The old expression that $100 ain't what it used to be definitely applies during inflationary times. If you look at a bundle of goods and what used to be purchased by $100, you're probably noticing now that that same bundle of goods is more expensive, say to the tune of $110 or $112. That's what inflation is. If you've been out and about, you've experienced this yourself. You've noticed when you filled up your gas tank recently that it's hitting your pocketbook a lot harder, or when you've checked out at the grocery store, that bill is a lot more expensive. So what does this all mean for real estate? Well, historically, mortgage rates and inflation have tended to trend the exact same direction. So as inflation runs hot in the economy, you'll see a slight uptick in mortgage rates, the way we have seen for last quarter and this present quarter. And while that might be the norm, there are some ways in which you can position against it and make smart decisions around a mortgage product. So what should people do when inflation is present? There are a few key areas where people historically have placed their money. First would be the stock market. Now, the stock market can be volatile, so this may not be the best place to initially put your money if you don't have the stomach for the roller coaster. Next places have been bonds or hard assets like gold and silver. These assets are a lot more conservative, maybe don't grow at such an aggressive rate, and can oftentimes be referred to as your grandfather's investments. Next, you guessed it, would be real estate. Real estate as an asset class has always hedged and performed well against inflation, historically speaking, and that is because you've got three huge benefits when putting money into real estate: appreciation, amortization, and taxes. Let's talk appreciation first, because this has definitely been one of the biggest advantages to owning real estate as of late. You've got annual appreciation rates that in most markets are doubling, if not tripling, the rate of inflation. So this asset that you put your money into is going to increase in value. Secondly, and perhaps most fun, you get to cut yourself a check now instead of your landlord. So you're paying down your own mortgage and your own balance and not someone else's. Lastly, and perhaps most impactful, are tax benefits. Your mortgage interest up to a certain point is tax deductible. So the annual amount of interest that you pay on this mortgage, you will get back in the way of a refund or helping offset some of your tax burden. So as an everyday person, these are some key ways in which you can battle back against inflation. So what to do next? First, get with a wealth advisor or a financial advisor that maybe you're already working with, or find someone that lines up and matches with the state of where you're at financially today. Talk about whether buying is going to be a good thing for you to do, given your finances and your current investment and savings goals. Then, perhaps most importantly, deal with a mortgage advisor, not just an e-lender or someone at a bank that's just pit-stopping this role on their way to a higher position at that bank. Someone who's actually bought and sold real estate themselves, who can guide you and strategically place you into the right mortgage product. Very important that you do this. And again, it'll be a key way to hedge back against inflation and position yourself for the future. Connect with me to discuss this topic and any others. I look forward to bringing more topics to you here on the Mortgage Reports, and thanks for listening.